Hi, I'm Amy Northard, the accountant for creatives, and today I'm going to walk you through a very basic bookkeeping spreadsheet that you as a freelancer can use for your bookkeeping. I recommend this for sole proprietors and single member LLCs. If you're an S corporation or a partnership, you'll really want to use a bookkeeping software like QuickBooks Online or Wave, because those programs will create automatically all of the reports that are needed by your accountant to do those special tax returns. So we will dive in here and I will show you a little bit more about the spreadsheet. Here's what it will look like. You will need to go here to File and make a copy to get your own version that you can edit. Each of these are links to the different tabs down here. We'll go through each one. The first one is the income spreadsheet, or the income tab. And this one you can change the different sections. I just did these based on what I see most commonly with our clients. So product sales will be those things that are typically the physical products, if you're selling anything like that, that has sales tax on it. The next, for an example, would be retainer clients, one-time projects, and then other income. So that could be a variety of things. The biggest point of this is to be able to come to your monthly total, and then it will also add it up here for the year and then provide you with an average as well. Just be sure when you're recording your transactions in here, especially with the products, that if you are collecting sales tax, make sure you exclude that number from your income. And you're also not going to include sales tax payments as an expense. They just basically stay off of the income and expense picture when you're filing your taxes. So you are kind of the middleman for those. So you're holding on to them from the customers and then you're sending it right back out to the state. The next tab is the expense tab. And with this one, my biggest recommendation is to not get too hung up on the categories. We have created a drop down here for you with the basic categories, but you can also overwrite it by typing in your own. So let's say you buy a lot of fonts. So you want to have a category that's fonts. That's totally fine. It will give you a little note here, but that's fine. You want to be consistent with what you call things. So if you do record a font expense on here, don't later call it digital download expense or something like that. You want it to be consistent throughout the year. Then what happens with this information is your accountant can sort it by category and total up the amount for each category, and they can use that on your Schedule C form. So just being really consistent with inputting your transactions in here is going to be very important. This spreadsheet is for those folks that don't want to use a bookkeeping software. So the downside to it is a very manual process. The upside to it is that it's a lot easier than having to learn an entire bookkeeping software. One tip, I guess I would say, is if you have all of your business transactions just flowing into your personal bank account, go ahead and separate that. So if you're an LLC, get the bank account set up under your LLC. If you're just a sole proprietor and it's under your name, you can go get another personal checking account and just use it for business purposes. That way, you can each month or each quarter grab your statements. You can mark off the transactions on that statement as you mark them off on here, just to make sure that you're not missing anything. And this spreadsheet will total them up for the month, and then you'll have a year-end total. And you can delete these sample things in here. The next tab is the mileage tab. So not everyone's going to have mileage, especially if your business is completely ran online, but you may still have to go to the craft store to buy supplies or the post office to mail something for a client. So those little trips like that are related to your business, those can all be tracked. And this spreadsheet is good for folks that don't drive a ton. If you are driving like weekly or even daily for client meetings, then you'll want to use something more automated like Mile IQ. So in here, you're capturing the date, the starting point, the ending point, the reason which for meals is very important, and your total miles in here. This is 8 miles, and the rate is 67 cents per mile. Keep in mind the rate typically changes from year to year, so 67 cents per mile is the 2024 rate. As you go into future years, you will want to just Google what the current rate is and update that formula right here. This spreadsheet is also really important just for kind of audit protection for yourself. So if the IRS were to question any mileage that you're claiming on your taxes, they will request this exact data, and you will have it already to just, print out a copy and send it over to them if they were to request it. So be sure to keep really good records. The other thing is, I know it's a pain, but you get, this one trip resulted in a $5 mileage deduction. So it's I think of it like a bonus deduction, especially if driving is a huge part of, your day-to-day job. So be sure to take the time to capture that information. The next tab is taxes. So this is income tax. And this is going to help you calculate or estimate how much quarterly tax that you should be setting aside. And I always recommend to our clients, once you finish your bookkeeping, multiply your profit for the month by the rate that we recommend, and then move that money to a high yield savings account. It can sit in there, maybe earn a couple bucks while it's waiting, and then it's out of sight and out of mind so that it's not quite as painful when you have to send in that payment each quarter. This 30% rate, it's a good average rate for most folks. That typically covers the federal and state. So about 25% for the federal, about 5% for state. Of course, if your state doesn't have income tax, you can reduce that down to 25%. But I do recommend, especially if you know that you're in a high income bracket, talk with your accountant and they can make a closer recommendation to what that percentage should be. So this, you'll notice there's not 3 months in each of these quarters. This is set up to align with how the actual quarterly tax payments, the due dates are set up. So the first one is April 15th. The next one is just 2 months later on June 15th. Then the third one is September 15th, and the fourth one covers 4 months, which is January 15th. So just be aware of that. You can still, if you're estimating your taxes for the year, you can still divide it by 4 and send those payments in. But if you are doing it more based on what your actual profit is, go ahead and send it based on these numbers. The last tab is sales tax. So with this, I recommend if you have a lot of sales and you are on a lot of different sales platforms to use something more automated like TaxJar that will hook into your sales platforms. They'll pull all of that sales data and then they can automatically file your sales tax returns for you. But if product sales isn't a huge piece of your business, or it's really simplified, maybe you're only in one state, only selling a little bit of product once a year or something like that, you can go the manual route, which is what this is. So you will want to put the date, the client name, taxable amount, non-taxable amount, the sales tax rate, and then how much you collected. So the difference between taxable amount and sales or non-taxable amount would apply to, for most folks, like if you had a service paired along with a product. Photographers come to mind immediately where they're being paid for their service of photography, but then maybe they're also selling a wedding album or prints as well. So that's why we divide this up to taxable amount and non-taxable amount. Each state's going to be different in terms of what they want to charge sales tax on. Some states charge it on digital products as well as physical products. Some states will only charge it on physical products. So do your research when you get into sales tax for the first time. This is just meant to help organize the information and then have it ready for when you go to file those sales tax returns. Over here is where you will just keep track of the amounts that you've paid. So that's kind of a rundown of this spreadsheet. It is very basic, but the goal of it is to have something very easy that you don't feel like there's a huge barrier to going in and actually doing your bookkeeping. That is a super important part of being a small business owner. And so finding something that your brain's not just going to want to run away from is really important. Like I said, once you kind of graduate to S Corp level or you're in a partnership, definitely reach out to myself or an accountant to consider outsourcing your bookkeeping, or at least get like a bookkeeping lesson to use something like QuickBooks.